Hello friends. Welcome back to your channel. In today's video, we will try to discuss about the most favored stock of Rakesh Jhunjhunwala, the Titan company, and how it makes money and if it is a good investment bet for the long run. So let's begin. Titan has a rich history, and it has been synonymous with watches for about 3 decades now. Titan is India's largest integrated watch manufacturer and the 5th largest globally. But over the years, the company has diversified its business segment into jewelry, eyewear, and other peripheral segments, including fragrance, wallets, handbags, and clothing. They have focused on segments that have historically been unorganized, and they try to become a large organized player in that segment. So this has been their main strategy. Titan has 20+ brands in its product portfolio. It also owns a license to distribute some international brands in India, including Tommy Hilfiger, Kenneth Cole, Annie Klein, to name a few. Titan has a strong presence in the market with approximately 1,700+ retail stores in India and exports to approximately 32 countries with 11,000+ multi-brand outlets sell Titan watches globally. Historically, Titan used to generate approximately 70% of the revenue from the sale of watches. But today, the watch segment generates merely 10% of revenue for the company. The jewelry segment is a significant source of revenue and generates 87% of revenue for Titan. Eyewear and other peripheral segments generate just 3% of the revenue for the company. The jewelry segment of Titan is also growing at great speed, with a CAGR of 15%. And this will have a significant impact on the company's finances as it contributes a whopping 87% to Titan's total revenue. The watches and eyewear segment is growing at par. Although the growth of the watch segment is steady, Titan holds approximately 65% of the market share in the watch industry. And it is expanding the product portfolio of the watch segment to smartwatches and wearables to maintain its market position. The jewelry segment is clearly a cash cow for Titan as it contributes a significant portion to the company's total profits and operates at an average EBIT margin of approximately 12%. Moreover, profits for the jewelry segment has grown at a CAGR of 21% over the last 5 years. And over the last 2 years, there has been a significant shift in Titan's segmental profits where the eyewear segment is running into losses, and other peripheral segments have become profitable. This is primarily because Titan has launched new brands in these segments and expanded its distribution network for the peripheral segments. Eyewear is facing significant competition in the market as it holds approximately 10% of the organized market share. India has a lower penetration rate in some product categories like contact lenses and sunglasses. India is the largest importer of gold globally and imports around 800 to 900 tons of gold annually to meet the jewelry industry's demand primarily. And gold jewelry forms around 80% of the Indian jewelry market. But the significant challenge in the jewelry industry is the fluctuating gold prices and heavy import duty by the government that increases the cost of manufacturing jewelry. So, Titan, to avoid gold price fluctuation, purchases most of its gold on lease. Here you can see the consolidated performance of each segment with jewelry segment garnering a growth of 16.6%. You can compare the performance of other segments in this slide. Dividend has increased 28% in the last decade and the payout ratio has been quite consistent. The market capitalization has increased by 27% CAGR since 2019. Promoters hold majority stake, which implies that they care about the business. Both the retail and foreign investors have invested equally, which implies that shareholders see value in the stock and growth prospects are immense. So we feel that the stock can be held in your portfolio for the long term and will create tremendous wealth. Thanks for watching. Until then, see you in the next video.